Many teams still treat tokenomics as something to finalize before launch, right? That's an interesting phenomenon. So, do you define tokenomics as a living system rather than a static model?
Yeah, how I look at it is like what you want to do is you want to have a real business model. That's the first step, right? So if are just only thinking token, like a lot of people are, you're not thinking correctly, right? Because the token can fail. And if it fails, that means you have nothing, right? So what are you building that has a moat that can drive value for customers that you can attach a token to? That's the question I have. If you can't answer that, then you have a problem, right? So that's ultimately the
Mhm.
biggest thing is how do you get it attached to something that has value, right? So, because if you don't, then no matter what, you're probably going to be more speculative and have a lot more failures, right? And that's the whole point is how you look at what a token is attached to is ultimately deriving its value, right? A token as a product itself, those are called memes. Those are the only instances where I found it to work aside from maybe like a Cardano. You have to build and you have to deliver alongside, real user base. And that's what I'm excited about is helping companies do that.
Across the projects you've seen survive multiple cycles, right? So, what do they share economically that failed projects often misunderstand at the outset?
Yeah, it all goes back to business model, right? Because if you have no money, you fail and you cannot keep doing anything, right? And so when you look at your business model and you look at the ones that have survived, you can pull up a Uniswap, you can pull up Aave, you could
Mm.
pull up Compound, you could pull up a lot of these protocols that have survived, and you'll find one key thing: you're making money, right? So because if you are not making money, you don't have any money to survive, and this space is extremely expensive. So you'll quickly find yourself at a loss. A good example of that is look at all the NFT projects. Even an NFT project that has a membership pass as the NFT, make money once, then you hope to make
Mhm.
money off of royalties. Well, do you really want members to turn that much? Probably not. So now guess what? You make nothing. You make it up front, then you make $0 for that on. And I've seen communities actually shut down because they run out of money. Why? Bad business model, right? So the whole point again
Mhm.
is a business model. And that's what we do a lot of is we really at tokenomics.net, I build in a business model into your data room that doesn't just have your tokens. It has everything there, even the Monte
Mhm.
Carlo simulations, how it might perform in the wild through data back research. All of that is there. Then we give all that over to development, marketing, right? Legal, finance, all these stakeholders can use the materials. That's how I really believe you should do it. Instead of, oh, we're close to launch. Now we should work on our spreadsheet. It's not a spreadsheet. It's actually your whole business and it's attached to it.
Mhm.
So if you're there, you're way too late.
I agree. I agree. When you evaluate the token economy before launch, right? Tokenomics. What variables matter before narrative, valuation, or market positioning enter before those enter the discussion?
Yeah. The biggest one is actually you can tell a lot just by seeing what a team publicly makes available, right? So what I always
Mhm.
think is you want to judge people by their actions and what they do versus what they say. So if they say, "Hey, we're a very sustainable project and, everything's about the community," as an example, then you look at their tokenomics and you find 20% to the team, 20% to investors. Are you really? Probably not, because your tokenomics show me clearly you are not, and it's just lip
Mhm.
service then. It's bullshit, right? So as I look at it, the allocation chart is really the biggest one. You can tell right there who wants the money. It's all right there. So if I see 25% to investors, you can never tell me that you're community focused. If I see the community sliver has 2%, it's 12 times more. So you can never tell me you're community focused. Doesn't work, right? So the biggest thing I would say you look at is the distribution, where those tokens go. As an example, just yesterday, Hyperliquid announced that now they're cutting back team token allocation in emissions. Why are they doing that? Because it was probably costing too much selling pressure. There were issues. What happened to price? Shot up instantly, right? So when you look at perception and what's actually happening, it's the distribution. That's a big piece of this. And many teams are greedy. Many people don't think that in advance, or they give tokens to people who will just dump and sell on them later. And then they might even have the misconception that, oh, that's my friend. They'll never sell on me. They will. Guess what? They will. Everyone will sell.
Mhm.
You know what I mean? So this is
Mhm.
kind of the misconception is the distribution is the most important thing to get right and who tokens are going to, because that's going to determine whether it works or not, right? If I only give tokens to people who never sell, I should expect no selling pressure. If I give tokens as a free airdrop to everyone who wants to sell, had a guy yesterday, Tony, I don't have a whole lot of money now. I'm waiting for my airdrop to come through so I can sell and now I'll finally have some cash. That person's adding zero value to that ecosystem. They're a pure extractor.
Mhm.
So why are we giving them tokens, right? Stupid, right? So when you start breaking it down into intellect and stupidity, you find a lot of the spaces working on a frame of stupidity, doing what we've always been doing, such as the airdrop allocation, which is ultimately not very smart. Because every project who's done that largely has failed. the volume all dries up immediately afterwards. Then all people just dump and take all the money from people who might have been buying the actual project. Now we say we have to do that for marketing, but we don't, because we were marketing projects through founder-led marketing plenty, very good a few years ago. We started doing this crap because it was an easy way to market through Cato and all these things that spun up, but it actually is destructive. It actually doesn't take much skill, to do a copy-paste strategy. So that's why they say, if we don't do this, it won't work, because you have no idea of how to actually build a strategy. And that to me is ultimately the whole point. If the only way you can grow is giving out tokens for free to airdrop farmers because you're a DeFi protocol, you're destined to fail.
You mentioned founder-led marketing. Do you think that's the right way to go to move forward instead?
I think so. Yeah, because right now, I don't know if anybody looks at my company page. Everyone knows who I am, right? And talks to me. It sees me on there online or whatever. It might know me as a tokenomics person or whatever, right? So why would you, as a founder, knowing that when you're interviewing with investors, they're going to look at you, a vendor is going to look at you, a community is going to look at you, anyone that has any skin in the game with the brain in their head will check you out as a founder before they decide to get in bed with you and do business. So if they look at your profile and it's not there, it's incomplete, you don't look like a thought leader, why would I expect you, for example, if you're in solar energy and you've never worked in solar your entire life and you were at the McDonald's fry line, why should I believe you're a solar person? It's bullshit, right? It's not going to work. So when I look at how you
I like
put
the
that profile
analogy.
together, right? This is it. This is it, right? That's the brand. It's the people that build the company, not the company brand that builds the company. It's the people. If there aren't good people, it's not going to work.
I fully agree with that. Yeah.